Today, I'm going to share with you 3 ways you can lower your mortgage interest rate. Stick around. Hi, welcome back. My name's Joe Brown. I'm a realtor with Century 21, listed with Beggins, located in South Tampa. Thank you so much for being here with me today. So, listen, there are buyers out there. So today, well, really yesterday on Thursday, Freddie Mac announced the mortgage rates for this week, and it was 6.77. I saw another report that was 6.87. So again, we've inched up from the 6.6, inching back up. Remember, for mortgage rates, you want to track the 10-year Treasury, see what that's doing. But there are ways you can lower the interest on your mortgage. And I'm going to talk about 3 ways. So number 1, it all has to do with credit scores. Now, I did a video quite a while ago, maybe more than a year ago, about credit scores. Now, I'll put a link to it here. Just talks about credit scores and what goes into a credit score. Well, number 1 is you want to raise your credit score. The higher the credit score, the better rate you get. So, first of all, how do you get a better credit score? Number 1, pay your bills on time. No late fees, right? Pay your bills on time. Creditors want to know that you are credit worthy, and part of being credit worthy is paying your bills on time. Number 2 is if you're able, pay off the bill every month it comes in, right? Don't carry a balance moving forward. Now, I listen, I know people are in tough financial situation and they're paying the minimum, but if you're able and create a plan, pay the bill off early, and then pay the bill on time. Number 3 is you want to keep the utilization at about 30%. So that means if you have a credit card with a $1,000 limit, you don't spend more than $300. Well, let's say you have a $500 balance. That's more than 3%. That's 5%. You know what you can do is ask for the credit card company to raise your limit. Can you believe that? Now, just because they raised the limit, I'm not telling you to use that extra money. But by raising the limit, let's say you go from $1,000 to $1,500, but you still have that $500 balance. Now you're at 30%. So your spending habit didn't change. It's just that the credit card allowance changed and it lowers your utilization, right? Now, the problem people have is they raise the limit and they spend to that limit. That's no good. Raise the limit and spend less. Because, again, think about it from the lender perspective, from the creditor's perspective. They want credit worthiness. So in their mind, we say you can borrow $1,500, you're only borrowing $500. That's less risk to us. So when it's less risk, your credit score goes up. Number 3, do not keep applying for new credit cards. Okay, that's when credit card companies that give you the credit score look and they see, oh, you're taking a card at JCPenney and you're taking a card with Visa and you're taking a card with MasterCard. They're saying, what's going on, right? So limit the number of cards you apply for. And then with that, another option, another suggestion, check your credit score at least once a year. It's good to do a couple times a year. And the 3 main companies, Equifax, Transamerica, and I forget the third, Equifax. So check the show notes below. Equifax and Transamerica are required by law to give you a free credit report every year for you to review. So just between those two, you can do one every 6 months. Another great service out there is Credit Karma, and they check your credit score, and that's free. You can access your credit score anytime. And then the fourth, listen, I know that there are people out there who do not qualify for a credit card, and that's a traditional credit card. Did you know that there's something called a standard credit card? And you can apply for standard credit card. So let's say you need a $300 limit. Well, what you do is you prepay that $300. And then you have this credit card, much like a debit card, but it's not a debit card, it's a credit card. And you can only spend what you have prepaid. And then you just keep that money. And then once you do that for about 6 months, your credit should be high enough you can apply for a traditional credit card. So that's point number one. Just improve your credit score by the credit cards you use. Here's option number two to improve your credit score. Improve your mortgage rate. Is you can pay money to buy the mortgage rate down, right? So, and you have to talk to the different lenders. So a lender may say, well, you can pay 2 points and lower the rate by 0.5%. Well, what's a point? It depends on how much the loan is. So if you take a loan for $300,000, well, 2 points means 2%. 2% of $300,000 is $6,000. So you pay $6,000 and it lowers your mortgage rate by 0.5%. So again, those terms and what they charge and how it affects your credit depends on the lender. So I can't tell you it's this. You have to check with each individual lender. With that, here's the fourth suggestion. It just hit me. Shop the rate, right? Just don't go to one lender and say, okay, here's the mortgage. Shop around because they all have different terms, different fees, different structures, and you can find the same quality of loan at a lower rate. So please shop around. And then here's the third option. And again, it may not apply to you. It applies to many people. And that is to get a loan with Navy Federal Credit Union. So if you're already a member, please listen. If you're not a member, check out their requirements to become a member. Because here's what Navy Federal Credit Union offers. They have, I don't know the specific name, but so let's say you take a loan for a mortgage for 6.5%, and you pay on time for at least 6 months. And then the mortgage rate, the standard mortgage rate drops to, let's say, 6%. As long as you have paid on time for 6 months, you can pay $250 and they will automatically lower the mortgage rate you're paying to 6%. You don't have to refinance or anything. Payment, and they lower the amount. But let's say another 8 months from now, the standard mortgage rate drops to 5.5%. Again, if you've paid on time for 6 months, pay the $250 and they will automatically change the mortgage rate you're paying. It is a great program. It is unique to Navy Federal Credit Union. And again, to get a loan from Navy Federal Credit Union, you have to be a member. If you're interested, check with the Navy Federal Credit Union to see if you qualify to be a member. So anyway, I've given you 4 ways to lower your mortgage rates. I hope that makes sense to you. Listen, I want to be your trusted advisor. I'm here to help buyers buy homes, to sellers sell homes. I'm here to help business owners when they need space with my commercial practice. So I want to be your trusted advisor. Go to my website, joebrownc21.com. Get in touch with me. Contact me. Let's see if I can help you, guide you, steer you. Right? There's no obligation for us to talk. So until next week, have a great day.